All righty. Well, hello, everyone. Thank you for joining us today for our virtual Open Enrollment Fair session. During today's session, we will go over healthcare savings accounts with Optum Bank. Before we get started, I would like to brief everyone on a couple housekeeping items. All attendees are muted and will be muted throughout the presentation. If you have a question, please type it in the chat box located on the lower right corner of your monitor. All questions will be answered at the end of the presentation, and be informed that if you type a question in the chat box, everyone attending the session will not see your question or your name. However, if you have a question that is confidential, please contact the Benefits Division directly. Lastly, today's session is being recorded. A copy will be posted on the Benefits Open Enrollment website. At this time, I will turn it over to our presenter, Suzanne Cheetah Fendel.
Thanks so much for the introduction and well, good morning, everyone. Welcome to the Health Savings Account Overview. Hard to believe that we're already moving up toward the open enrollment season. So without further ado, we'll go ahead and cover health savings accounts. First off, an HSA account requires a qualifying high deductible health plan in order to enroll. Then HSA is used to pay for qualified medical expenses immediately. The account is funded by you, your employer, or by others. And the account funds belong to you. Should you change employer groups, move to another job, retire, those funds are yours. They roll over year, and those funds belong to you. The funds grow over time and can be invested once you reach a threshold of $2,000. This is an excellent way to grow your health savings account for use with future medical expenses in retirement. Continuing with our HSA overview, an HSA works through depositing money, you save on taxes, and you pay for your qualified medical, dental, vision, mental health, or chemical dependency expenses. Again, you may choose to invest your savings. You may hear of HSA accounts referred to with the triple tax savings. Contributions through payroll deduction are tax-free. Federal, state, and FICA taxes do not apply. Funds that are used for qualified medical expenses are withdrawn tax-free. Any interest earned on the account is also tax-free. Today, we're going to cover quite a few items specific to your HSA account and HSA accounts in general. We want to ensure folks understand the contribution limits, the benefits to funding to your maximum allowed HSA contribution amount, understanding the tax savings. We'll check in on qualified health expenses and also review how to pay with your HSA account. We encourage you, if you have an HSA or are considering opening an HSA, to designate a beneficiary. We'll look at managing your account. We'll explore different resources and talk again about growing your savings. The 2020 limits have increased just slightly for plan year 2022 and has increased $3,650 for individuals, so up $50. $7,300 is the limit for contributions for 2022 for families. That is up $100 as well. You may make contributions for your prior plan year up to the tax filing date. Typically, that is April 15th, but this year with the pandemic in place, that was extended out to, I believe, July 15th or 16th. Again, the deadline to make a contribution to the prior tax year is aligned with the tax filing deadline date. One way to plump up your HSA savings is known as a catch-up contribution. For those individuals who are 55 or older, you may contribute an additional $1,000 per year. If you have a spouse that is also 55 or over, they may add $1,000 as well. They would need to do this through opening their own standalone HSA account. Again, great way to plump up those savings in anticipation of retirement. Any County of San Diego contribution does apply toward your total contribution maximum. So keep that in mind if you are fortunate enough to receive contributions made on your behalf by your employer. Next, we'll take a look at some qualified medical expenses, which the IRS does determine. Chiropractic coverage, smoking cessation, prescription copays, hearing aids, lab services, urgent care visits, glasses, and contacts are all examples of qualified medical expenses. In addition, any health coverage that you purchase while receiving unemployment benefits, any COBRA continuation coverage, any qualified long-term care, and then Medicare premiums and out-of-pocket expenses are also HSA qualified medical expenses. There is a list on the Optum Bank website, as well as a qualified expense tracker and an item indicator, which outlines 213D expenses, which are covered for HSA qualified medical expenses. One item that we should cover as well is who is covered under your HSA. Who can you pay expenses on their behalf for? If you have an individual who is your tax dependent, who is enrolled in your high deductible health plan, you may use your HSA to pay for those expenses of your family member. Methods of paying with your HSA include your Optum Bank Debit Mastercard. If you are at the point of service, at the pharmacy, at the doc's office, you can slide your card. No substantiation is required. Optum does not collect receipts or explanations of benefit. You, as the account holder, are responsible for being able to provide that in the event the IRS does audit you and wants proof. A little bit later in the presentation, we'll show you how you can save those receipts so that in the event you are asked to prove that the funds were used for an eligible expense, you are able to do so. Another method of paying with your HSA is via paying online. You would log into the portal and access the make a payment function and go ahead and direct funds to your provider. Another way to do so is to reimburse yourself. You would pay for your expenses out of pocket using your normal bank account, checking card, what have you. And at a later point, you can reimburse yourself. You can do that via the portal and click reimburse yourself after you've logged into your account. If you have established bank account connectivity to your HSA account, you could transfer funds electronically. You could otherwise cut a check, or you could access an ATM machine, a bank machine, and pull cash out. We'll give the caveat that there is a charge, I believe it's $2.50 to pull funds that would come from your HSA. There is also typically a bank charge from your individual banking institution. We'll talk next about investments. There are three different ways to invest once you have reached that $2,000 threshold for investment. You can use what's called the Robo Advisor through a company called Betterment, which are typically for folks who are newer to investing or aren't certain how to choose those resources to put their funds into. The Robo Advisor or Betterment will ask you to answer a few questions such as age and risk tolerance, what your goals are, etc. And based on that feedback, we'll make some suggestions as to what funds to put your available money into to achieve your goals. Um, the other two options are mutual funds, which people choose themselves from different Vanguard funds and target date funds, etc. Um, There are also self-directed funds for the more experienced investors who want more control and want to align with their 401k. And I should have moved the slides forward to talk about the Robo Advisor, Betterment, and the HSBA, the self-directed account. When you are eligible to invest, you'll see one of three options presented on your portal landing screen. The first option you see is when you have no investments and you're below the investment threshold. You'll note that it says indicates to Ryan how much more he needs to have in his cash account before he's eligible to invest. The second one will show that this individual is eligible to invest, but they are not yet investing. The third example for Deanna um, shows that they are active and do have investments, and notes that they have a certain amount in, and they're eligible to enroll in more options. The optumbank.com website, once you've logged into the portal, has a great education session on how to invest your dollars and how to research your mutual funds. There's a nice tour of the HSA investing process. One question I always field is, what happens if I have an expense that I need to pay out? Um, how do I move do I have access to the funds that I've invested? The answer to that is yes. You may move your funds back in to your cash account to have access to pay things. It takes roughly 48 hours, 2 business days, to get those funds moved from the cash account to the investment account, and vice versa, from the investment account back into the cash account so that it is available to use for payment. Next up, we're going to take a look at the HSA account holder website at optumbank.com. You log in, and when you land on the page, you would either register or log into your account as if it already exists. You'll have a one-time SSO or Health Safe ID registration. That will be your username and login across all of the Optum and United accounts that you may have. Once you have obtained access, you're able to manage your HSA account online. This is the landing page that shows what the options are and what it looks like. You may see all your current balances at once in the dashboard. You may pay your medical bills, reimburse yourself. You can track your bills and reimbursements and out-of-pocket expenses via the expense journal. I had mentioned earlier in our discussion that you may be, if you are audited by the IRS, this is a great way to have all of your receipts and information at your fingertips versus in a shoebox somewhere tucked under the bed. You can view, pay, and store your claims, track your contributions. You can also contact customer service. There are FAQs posted, and there are different forms and investment tools. And some of the tools are great in addition to the investment tools. One that I particularly like is the ability to put in your prior year's expenses, take into consideration how much what you have in the year ahead for your household's expenses. So, for example, if you know that someone in the household is going to need glasses and contacts, somebody's got some dental work coming up, you can put those estimates in and get a great idea of how much you're going to need to set aside to cover those amounts. So there are many useful tools, including that which I've just described, available on via the portal. I mentioned the receipt vault. This is a great way to upload your any receipt or explanation of benefit that you may be wanting to keep in the event that you are audited. It's a great way to set these aside again so you have them at your fingertips. This is also something to keep in mind if you should choose to make a payment with your own personal bank card rather than your HSA card. And then if you wish to reimburse yourself at a later point, this is a great way to refresh your memory. Yes, I paid $500 for my kid's orthodontia. I'm now reimbursing myself this $500. Next, I'm calling out the Optum Bank mobile app, which is available for both Android and iOS users. Anything that you can do on the mobile app is able to be done via the Optum Bank mobile app. You can track your balances, recent transactions, see where you're at with your contribution limits. You can make a contribution via the mobile app. Check transfer will work as well. You can capture and upload receipts. And again, you can maximize your HSA by tracking your progress along the different stages of savings and spending. Some of the other tools and resources on the OptumBank.com website are HSA calculators, contribution trackers, asset allocation calculators. The health savings checkup tool is the item that I'd mentioned a bit earlier about determining how much to set aside. The qualified medical expense search tool is extremely useful as well. It, this is the tool which allows you to see whether or not an item is an HSA eligible expense. There are a variety of videos and Optum Bank Academy sessions as well, both live and recorded. Great information on using the portal, an overview of what an HSA is, how to invest, different ideas of what to invest in. So, in summary, we have covered the contribution limits, and I will call out as well here. You may make a deposit in three ways. You can either do this through payroll, you can transfer funds from your bank account to your HSA account in the event that you have aligned your bank account or made a connection with your bank account to your HSA account. Thirdly, you could send in a check with a form to go toward your HSA. If you do make deposits in a way other than um, your payroll contributions, I will call out that all contributions made on your behalf do go toward the IRS limits. Next up, you do have triple tax savings using an HSA, contributing funds on a pre-tax basis. Of course, folks in California are able to claim that after the fact at tax time. Anything that you spend the funds on is tax-free, provided it is a qualified medical expense. And any funds that uh, you earn through either interest or through investments is done so tax-free. I suggest you become familiar with what a qualified medical expense is or a qualified HSA expense is. They're typically the 213D expenses. The IRS.gov website does have a fairly comprehensive list of qualified medical expenses. Um, we have covered how to pay with your HSA. I encourage you to designate a beneficiary in the event that the account holder does pass on. I want to ensure that those funds do go uh, properly. Your beneficiaries can use those as an ongoing HSA. Took a look at managing your account, the different resources that are available, and again, a reminder to grow your savings. And that is the last slide that we have in our deck. Nadra, are there any questions that have come across?
Yes, so we do have a question. I believe you may have addressed it during the presentation, but the question is, I read deposited funds into the HSA are tax-free if done through payroll. My job classification does not permit this through my employer. As an alternative, would I be eligible to make or take a deduction on my tax return to gain the tax-free benefit that way? Thank you.
Um, this individual is absolutely correct. The state of California, and of course the other states, there are two other states which are escaping me at the moment, do not allow pre-tax contributions. However, they do get credit for that at tax time when they file.
Great. Thank you for that answer.
Mhm.
Another question. Can I use the funds for my domestic partner?
Yes, you may,
Great.
provided that they are tax dependent.
All right. I believe we just had those questions. Let's see if any more come through. Feel free, everyone, to type a question in the Q&A box if you do have one. We'd be happy to answer those questions for you right now.
While we're waiting for questions, I will call out that it is anticipated, and I think that for my next presentation, I'm going to have to create a slide that in retirement, it's roughly $350,000 of an anticipated medical expenses for a couple from age of retirement to death. Um, Having an HSA in retirement is a wonderful option as well. Once you reach retirement age, or rather enrollment in Medicare, you can no longer contribute to an HSA, but those funds are yours to use. If you have strategized and paid out of pocket all along during your working career and not touch those HSA funds, those funds can come out on a tax-free basis and without penalty if they're used for qualified expenses. One little known item about HSA accounts is once you hit 65, you can take those funds out for non-medical expenses without a penalty. The funds will be considered taxable income at that point. However, there is no penalty. So some people are using HSA accounts comparable to a 401k account, being able to maximize and set aside funds and then use those funds strategically in the future as income.
Mhm, great. Thank you for that information, Suzanne. We do have a few more questions that have come through the Q&A box. What is the difference between health savings accounts and healthcare flexible spending accounts?
Sure, that's a great question to address. So, flexible spending accounts, healthcare flexible spending accounts, are limited to setting aside. The current limit is $2,750 a year. Those funds typically are use it or lose it. So, if you do not use that 2750 during your plan year, you typically do not are not able to use those funds into the next year. Some plans are allow you to roll $550 forward into the next plan year. But if you were to leave mid-year, those funds would not move with you. If ultimately, if you don't use all the funds, you are at risk of losing some or most of them. Whereas with an HSA, and with the FSA is aligned with a PPO plan or an HRA plan. So if you do not have the option, say you are already uh, Medicare enrolled and not eligible to participate in the HSA, it's a great way to reduce your taxable income. However, there are some pretty significant differences between the HSA and the medical FSA.
Great. Our next question, if I have a qualified life event and go to a different type of medical plan, what happens to the HSA account?
That HSA account remains yours. You are able to use those funds, but you are no longer able to contribute to the HSA account. With an HSA, if you change your plan, your medical plan, if you change your employment, if you retire, if you are terminated, those funds are yours to keep, and they may be used for eligible medical expenses until the account is depleted, or you may save it and keep it long term.
Excellent. Our next question is, if I take out $2,000 cash for braces, I only need to show the receipt at my tax return or IRS audit?
That is correct. With flexible spending accounts, the accounts that we were talking about just a bit earlier, typically the administrator will require that you show an explanation of benefit or a receipt, some form of substantiation within a few weeks of using your payment card for flexible spending. With HSA, you are not required to show that unless you are audited. You do not need them at tax time either. So only in the event of an IRS audit would you be required to show that you had used the funds for appropriate expenses.
Oh, great. Our next question, can I transfer my HSA contributions outside of Optum, for example, to invest via Fidelity or Vanguard?
That's not possible. You would need to invest within the funds that are being offered and the options being offered by Optum.
Great. Our next question, does the monthly fee go away once you reach $2,000 in the account?
What does the what go away?
The monthly fee.
The monthly fee goes away. I want to double check here. I want to say it's typically at $3,000. So the monthly maintenance fee that is charged for the management of the account will go away. I'm going to jot that down as a takeaway question. It's typically $3,000 for the fee to be waived. That I can get back to you on.
Okay, excellent. Our next question, if my domestic partner, who is also a County of San Diego employee, adds me to his high deductible healthcare plan, will my flex credits go into my own HSA account or can I add them to his?
No, each HSA account is an individually owned account. So you, anything on your behalf would go into yours. Anything contributed on his behalf would go into his. You are not able to combine those. However, if you have recently moved County of San Diego as an employee and have an HSA account with a former employer, you may combine those accounts. So a historical HSA can be transferred into and consolidated with Optum's HSA opened on your behalf through County of San Diego. Many pros for doing this type of thing, namely ease of administration, having all your funds in one spot, and also that added balance, uh, plumping up your balance will allow you to reach your ability to invest through the Optum investment options sooner.
Okay. Another question, which is a little vague, but my understanding of the question, can you roll over to a 401A or 457 after age 65?
That I am not certain of. I'm not familiar with that, but also am not able to give any tax advice. I would suggest consulting a tax professional or investment professional to clarify that.
Great, thank you. Our next question, what happens with the account contributions once I'm eligible for Medicare?
Those funds stay in place. You can no longer contribute to the HSA, and you are no longer able to add funds through the investments. However, you can use those funds for appropriate expenses on a tax-free basis. You may take out the funds as cash with no penalty. However, they would be considered taxable income.
Okay, next question. Can I reimburse myself to pay for premiums taken from my employer or my spouse's employer?
No, if you are on Cobra, you can. If you are on Medicare, you can, but you cannot reimburse yourself for payroll withholdings done for medical coverage while you're actively employed.
All right, and we have a actual follow-up question to the one about the domestic partner being enrolled with them for their high deductible health plan. As a dependent in a domestic partner's high deductible health plan, can the employee contribute to an individual HSA with Optum through county payroll deductions? So would they be eligible for their own HSA since they're a dependent under someone else's high deductible health plan?
Okay, this one's stumping me, and I know the answer. It's like all these facts are swimming around. Um, oh, I'm going to have to call on a on a helpline on that one to clarify. I'm so
Okay,
sorry.
not a worry. And you can actually email me the information. I'd be happy to get back to the employee who's asking.
Excellent, thank you.
Absolutely. Moving to the next question, how common are IRS audits on individual HSA accounts?
I will share that I have been in the HSA portion of the insurance industry for 10 years. I have never heard of one taking place. Your mileage may vary. I have never been aware of one. Don't do illegal things, kids.
Next question, can an HSA be used for gym membership for medical reasons or non-medical reasons or both?
You may be able to get a letter of medical necessity for a gym membership, and at which point it would be eligible. If it were just to pay for your lifetime fitness fees because you want to be healthy and work out, they are not eligible. Gym memberships are not eligible.
Okay, how about my domestic partner has two dependent children. Can I pay for their medical expenses with my HSA account?
If those children are your tax dependents, you may.
Okay, another question. All the great questions coming in. The limit is 7,000 for a couple. If both my husband and I contribute HSA as county employees, does this mean we can each, does this mean we each are limited to 3,500 annually?
It depends on how you are enrolled. So if you have two individual medical accounts and two individual HSA accounts, um, you would be limited to whatever your specific setup is. So, say for example, you have two children, one adult family member or one County of San Diego employee covers one child, the other covers the other. You could, boy, that one I'm going to clarify as well.
Okay. Next question. Where might I find the fees and other costs involved with investing either via Betterment or self-directed mutual fund?
The self-directed is on the site. I'm going to do a quick message to a coworker Oh, wrong one. To clarify the investment rate for betterment.
Perfect. Do you think we'll have that information before the end of this afternoon? By this afternoon, I should say.
Yes, yes.
Okay. And finish that. Also, oh, this is a follow-up question to this most recent one. Just need to clarify, do I need to have a high deductible medical plan in order to maintain my Optum HSA? If I switch to a non-health plan and non-high deductible health plan, tongue twister, in 2022, what are my options for the money currently in the account?
Gotcha. So if you should opt into the PPO plan for the 2022 plan year, the funds remain yours and you can continue using them for any purposes that are specific to medically eligible expenses. So those funds are yours, they don't go away, and you may use them.
Okay. Hopefully we have some more questions coming in. We're also waiting for response for another inquiry from not too long ago. For any of those who missed the presentation in the very beginning, we are running a repeat of this session on the hour at 11 a.m. So you're welcome to join us again, especially for those who may have missed the very beginning. Do keep those questions coming in. Okay, a few more questions for us, Suzanne. Um, well, for the individual who missed the first part, not only are we repeating the session at 11, the recording will be posted on the Benefits Open Enrollment webpage on the website. And yes, we'd be happy to give you a copy of the PowerPoint as well. So, one of our other questions, if I have a healthcare FSA, can I also contribute to the HSA account?
On this one, I'm going to ask to clarify with the County of San Diego HR team. Do you offer a limited purpose FSA?
Yes, we do.
Excellent. So one great way to preserve your HSA funds is to enroll in a limited purpose FSA. You may not have both an HSA and a medical FSA at the same time. However, you may enroll in a limited purpose FSA. A limited purpose FSA is similar to a medical FSA in that you can set aside $2,750 annually, but those funds may only be used for vision benefits and for dental benefits. So if you know that you have an HSA, your household has braces, glasses, contacts, dental work coming up in the plan year, the limited purpose FSA is a great way to set aside funds that allows people to um, uh, use the funds on the first day of the plan year to pay the dental and vision, but to allow your HSA funds to be preserved.
Great, thank you. A few more questions. This is great. For joining the next session, the link will be the same. So you shouldn't have any problems using that same link that you used just now for the 10 o'clock. Another question for us, Suzanne. Is there a lifetime maximum contribution amount?
There is not a lifetime maximum contribution amount for your HSA. Some of the balances that I have seen are quite impressive and a great way for folks to secure some funds for their retirement, for health purposes, or for living purposes.
Right. Another question. If my domestic partner and I are both county employees, is my maximum contribution $3,650 for my individual account, or can I contribute more on my individual HSA up to the 7,300 for the family limit?
It is dependent on how many folks you have enrolled underneath you and you're on the medical plan. So if you have additional dependents, so say that two individuals are County of San Diego employees, each has enrolled themselves in the plan. Each individual would be limited to the 3650. If you have dependents underneath you, you could go up to the family amount, but that is one of the takeaway questions, clarifying the maximum amount. I do have a ping in my other ear here. It appears that the point at which monthly maintenance fees are waived is $5,000.
Righty. Another question, Suzanne. If I opened a plan and deposited funds on or before December 1st, for example, on the December 1st, I deposited 1 year's worth of HSA funds, would that be eligible for tax deductions?
It would be. So anything made within a tax year is going to be attributed to that particular tax year. Again, I mentioned earlier in the discussion that you are able to add funds to the prior tax year through the tax deadline date. If you were to do that, you would need to indicate that was the case. You'd either have to coordinate with your HR team or indicate so on the methodology that you are making that contribution.
See. Another question, would we receive tax forms to provide to our tax preparer?
Those are mailed out each spring. Also, if you access the portal, you are able to pull copies of those.
Mhm. Let's see, here we have another question. All right, Suzanne, we have a couple more questions.
Great.
How much can I contribute to a HSA if I change to a high deductible health plan mid-year?
Ooh, that's a good one. Um, I'm going to double check on that one if that has to be prorated or not.
Okay. Next question I can actually answer. After today, if we have further questions, is there a specific department or phone number we can call for someone to assist? And yes, you may call the benefits division. I can give you the 800 number right now. It is 888-550-2203. And this 800 number again is for the benefits division with the county. We'd be happy to assist with answering additional questions for you.
There's an
Okay. I want to start the recording again if you would like to answer that question for us.
Thank you. You're charged an annual fee of 0.5% of your HSA balance that Betterment manages.
Um,
The question was, are you able to do the full amount for your HSA contribution? If you should uh, enroll mid-year, the feedback that I'm getting is that you can only contribute for the months in which you are eligible to do so. So if you became eligible to contribute due to enrolling in a high deductible health plan in June of the year, you would only be able to begin contributing that total beginning for the month that you were eligible. So June through the end of the year, provided you were enrolled, you would be able to prorate those amounts. So assume 1/12 per of the total amount.
Thank you for that information. Very good to know. Okay, reclarification, and this is regarding the betterment fee. Oh, it's just actually a thank you. Thank you for the clarification. No fees for mutual funds if over 5K if self-invested. Betterment fee is 0.05%. We've gotten quite a few thank yous on here. That's
I've got some people sleuthing on the website.
great. Once again, if there was anyone who joined late, we will be doing another session with Optum at 11 o'clock. So you can stick around or rejoin us with the same link at 11 for information about the health savings accounts.
Uh,
Oh,
there was a question earlier about two County of San Diego employees and what could their maximum contribution be if each is enrolled in the high deductible health plan and HSA. Between the two employees, they cannot exceed the family maximum.
that's good. Thank you for finding that out. I'm sure our employee would be very thrilled to hear that.
You have quite a few folks that are happy outside the workplace as well. Thanks so much for starting that again. If a domestic partner, if domestic partners rather are covered, both covered by the family plan and one is a tax dependent of the other, the partner carrying the coverage can open and fund an HSA up to the family contribution limit and pay the partner's qualified medical expenses from the account. However, if the domestic partners are covered under a family plan, but neither is the tax dependent of the other, each partner may open an HSA and each may deposit up to the family contribution limit. That's very similar to having adult children as well. So if you have an adult child who is covered under your plan, but is not your tax dependent, that adult child can open an HSA and contribute up to the family limit.
Would we like to get started on round two of the presentation, Suzanne?
Excellent.
Okay. This is all yours.
Okay, thanks so much. Good
Uh-huh.
morning, everyone. It's still morning in California. I'm Suzanne Fendel, and I will be covering the Health Savings Account workshop today in anticipation of open enrollment season. Um, there is the availability to send questions via the chat function, and those questions will be covered at the end of the session. Today, we're going to take a look at the HSA requirements for a plan. You must be in a qualifying high deductible health plan in order to elect and enroll in the HSA account. HSA funds are used to pay for qualified medical expenses immediately. The HSA is funded by you, your employer, or others. All funds contributed will go toward the total allowable IRS contribution maximum. These account funds belong to you. If you change employment, if you change medical plans, these funds are still yours to use. HSA funds can be invested as they grow over time once a threshold of $2,000 savings has been attained. Again, an HSA works through depositing money. This allows you to save taxes. You can pay for qualified medical, dental, and vision expenses on a tax-free basis. Again, you may choose to invest your savings to grow those funds. We often hear of the triple tax advantage when discussing HSA accounts. Contributions made through payroll deduction are tax-free. Federal, state, and FICA taxes do not apply. Funds used for qualified medical expenses are withdrawn tax-free, and interest and funds gained through investment are also tax-free. In a bit, we'll touch on the state of California and state tax. This is simply handled a bit differently in that the contributions are claimed at tax time rather than being pulled tax-free on the front end. Today, we're going to take a look at all these different aspects of the HSA, hoping to fully explain contribution limits, the benefits of funding to your maximum amount, understanding the tax savings associated with HSA accounts. We'll talk about qualified expenses, how to pay with your HSA, the importance of designating a beneficiary once you do enroll in an HSA account. We'll chat about managing your HSA account and look at some of the different resources available and talk about growing your savings. The 2022 HSA limits have been announced by the IRS. There's a slight increase for 2022, uh, allowing individuals to set aside up to $3,650 and families to set aside $7,300. These contributions can be made to the prior year up to the tax filing deadline. That's typically April 15th, but with the pandemic this past year, they were extended to July 16th. We'll keep an eye on that deadline, but know that if you were not able to contribute your full amount for whatever reason during the actual plan year, you will have an extended deadline to make that contribution. Anyone that is 55 or older may make what's known as a catch-up contribution. You can add an additional $1,000 per year if you're 55 or older. If you have a spouse or a domestic partner that is also covered, they may set aside an additional $1,000 as well. That $1,000 would have to be set in a standalone HSA account, but they're certainly able to do so. Wonderful way to plump up those HSA savings as folks move toward retirement. I will call out as well that any contribution made on your behalf does count toward the total maximum contribution amount allowed. So if your great Aunt Betty sends you a check for $500, you don't know what to do with it, and I think, hey, I'd like to pop this into my HSA for a later point, that $500 does go toward your maximum limit. A few items specific to qualified medical expenses. Chiropractic and acupuncture visits are eligible. Docs visits, prescription copays, hearing aids, hearing aid batteries are all eligible expenses under your HSA account. Physical therapy, smoking cessation, lab tests, urgent care visits, glasses, and contacts are all HSA eligible. Items that are not eligible would include teeth whitening, for example, and gym memberships. There is a comprehensive list at the irs.gov website. There is also a qualified expense uh, finder on the Optum Bank portal, which you can plug in the item that you wish to purchase, and it will tell you whether or not that is an HSA eligible expense. A few other HSA qualified items include health coverage while you're on unemployment, COBRA continuation, long-term care coverage, and medical premiums and out-of-pocket expenses. There are several ways to pay with your HSA. First and most commonly is the Optum Bank Debit Mastercard. You can use that at your point of service, at the pharmacy, the doc's office, any place that you're having a point of service actually. You may log into the portal and pay bills online by accessing the make a payment option. And you also may reimburse yourself. If you have set up connectivity with your own personal bank account to your HSA account, you may transfer funds into your personal account. You may send yourself a check, or you may go to a ATM machine and pull funds out to reimburse yourself. I will call out that there is a fee associated with using the ATM, typically a total of about $5, some of which comes from Optum, some of which typically comes from your banking establishment. Um, but it is certainly possible that you may reimburse yourself. I'd like to clarify a situation where you may wish to, or why you may wish to reimburse yourself. I always use the example of my kids' orthodontia. Each month we'd go get the braces tightened, and I would either pay the monthly copay with my HSA card, or I would use my regular personal checking account, use my bank card for that. At a later point, I would know that uh, reim- I had paid for $500 out of pocket, $500 worth of services, and I'd simply reimburse myself by transferring the funds. There are quite a few ways you can be strategic with this. Some people opt to not use their HSA at all, and then at a later point, either end of the year or in retirement, reimburse themselves that amount. There are several investment options that are available with your Optum Bank HSA plan. There are several different ways that you can invest once you reach a $2,000 threshold. First up is the Robo Advisor method, which is through Betterment. Essentially, this is a way to um, have a bit of a supervised or assisted selection process. It typically is for folks who are not as familiar with investing. You would be asked several questions to determine your comfort, risk comfort. You'll be asked your age, what your goals are, what you hope to attain. Based on this information, suggestions will be made for you. And the cost for that is 0.5% annually to use that function. There are quite a few options to get additional information on the optumbank.com website specific to the robo-advisor. Another option is the self-directed investment, uh, and there is no fee for that. Quite a few different options and plans available. Again, the optumbank.com website is got an excellent section on how to invest, why to invest, and how to select the plans appropriate for your goals. As you have your account, your HSA account, there are three different views that will cue you into whether or not you are eligible to or are currently investing. The first example you can see on the left is specific to Ryan's account. You can see he has 497.35 in his HSA total. And so under the investments portion, it says, hey, Ryan, another $1,500, and you are able to make some investments. The second option is Constance. Constance has a cash account or savings account of over $10,000. It does mention, hey, you're eligible to invest. You may invest up to $9,500. Get started now. The third example is Deanna, and you can see that she does have um, sufficient funds to do the investing. It appears that she does have funds in the mutual funds, and it's letting her know that she's eligible to enroll additional funds uh, into additional investment funds. Those three options will be presented depending on your balance and your account specifics. I'd mentioned earlier that there are some investment tools on the optumbank.com website. You would need the minimum balance of $2,000. It's the first $100 after the $2,000 threshold that does actually allow you to invest. Some of several of the education tools include investing your HSA dollars, researching and choosing mutual funds, and taking an actual tour of how to make that HSA investing happen for you. A question that we always field in these sessions is, what happens if I need access to the funds that I have put into the investments? Say there's an unexpected medical expense or something that comes up that you need to pay for. It takes roughly 2 business days or 48 hours to move the funds from the investment side of the house back to the cash account where you can use those funds uh, to pay for an expense. Likewise, if you would need to move funds or want to move funds from your cash account into the investment accounts, it takes that same 2 business days, roughly 48 hours. Next up, we're going to take a look at the HSA account holder website at optumbank.com. If you are new to the account, you would select register for your health safe ID. This is a single sign-on authorization, and this would be your login option to get into any of the United or Optum accounts. This is additional security. Required info is last name, date of birth, last six of your social, as well as zip code. Once you are registered for the account, there are many things that you can do to manage your account online, including seeing all your balances at once and in the dashboard view. You may pay bills, reimburse yourself, track bill pays, reimbursements, out-of-pocket expenses, view pay and store claims, track those contributions. There are areas you can access FAQs, frequently asked questions. You can get in touch with the customer service team via the portal. And you can also find different forms. For example, if you wish to make a contribution using a paper check, you'd find where that form was. And also you're able to mention or able to notice and view the mentioned investment tools. One thing I will call out is the receipt vault. This is a method by which you can save your explanations of benefit, any receipts, any bills, that type of thing. You may ask, why do I want to save these items? In the event you are audited by the IRS, you will need to prove that you spent your funds on a medically eligible item. So in the unlikely event that you are audited, it does happen, but it's not common. You would be able to go back to your receipt vault and say, oh, hey, there were $3,200 paid toward hearing aids and produce a receipt for that. Extremely handy, great way to help you keep track of what you have spent on. There is also an Optum Bank mobile app for both Android and iOS applications. Everything that you can do on the Optum portal, you can do on the mobile app. Nice to have that with you on the run. If you're picking up a prescription, you're not sure of what your balance is, you're not certain whether or not you have the funds to cover that, you're able to hop online real quick and check. Likewise, you're at the pharmacy, you have the receipt, you're able to take a picture of that and upload it, save it to your receipt vault so you have record of what you spent in the event that you were audited. Again, this is expands a bit on what the capability is of the mobile app. Everything you are able to do on the Optum Bank portal on a desktop, you're able to do on your smartphone. The Optum Bank website has quite a few other resources and tools that are very helpful. HSA calculators, contribution trackers, again, viewing and filing receipts, the asset allocation calculator, health savings checkup tool. I'm fond of this one as it helps you determine how much you should set aside, how much you need to set aside for your potential expenses for the upcoming plan year. For instance, if you know that the family is going to require a certain amount of dental work, contacts, glasses, you have some planned expenses, you're able to uh, fill that in and get an estimate of how much you need to set aside for the given year. Along with those resources, the qualified medical expense search tool is handy if you're not certain whether or not something you're going to be purchasing is or is not an eligible expense under your HSA. There are quite a few videos on how to use the portal, what is an HSA, who is an eligible dependent, how do I invest, why do I invest, that type of thing. The Optum Bank Academy is a series of educational videos and sessions. Some are live, some are are canned, if you will, and it helps you manage your HSA account and ask some of those questions that you may not have the opportunity to ask at another time. Best thing about the Optum Bank Academy is you can pursue it at your leisure. Great resource. I refer to it frequently. So again, important things with an HSA include understanding what your contribution limits are, how much can you put in, knowing how to make a deposit. You can do that through payroll uh, contributions on a biweekly basis or on a per payroll basis. You can make a transfer from your personal bank account to your HSA account. And you may also send in a check to make that contribution toward your HSA, along with a form directing it to the proper place. I will call out that all these contributions do go toward the maximum allowed based on your plan, and you will need to have an idea of how much, where you're at with that contribution process. We called out the triple tax savings, talked a bit about some qualified medical expenses and how to find out whether or not your expense or your item is eligible for HSA reimbursement. Talked about how to pay with your HSA. Need to stress a bit more the importance of designating a beneficiary in the event of your demise. We want to ensure that the funds are going as you wish them to go. That beneficiary may use that HSA as an HSA is as HSA funds would be used. If the individual would have an HSA of their own, they could combine those accounts. Talked a bit about managing your account, exploring the different resources, and then growing the savings for retirement. And that's the high level overview of what I had to discuss today. Were there any questions that have come up on the chat?
Well, questions. Doesn't look like we have anything just yet since the earlier session. Um, give a few
Okay.
more minutes and
Yep, that's absolutely fine. I'll cover a couple of the questions that had been brought up with the first sessions group. At what point is the monthly maintenance fee waived? Once an individual hits $5,000 in their cash balance, there is no maintenance fee assessed to that particular HSA account. There were questions also about domestic partners and HSA accounts. If you have, for instance, an adult child who is covered under your health plan and that adult child is not your tax dependent, that adult child may open an HSA account of their own and contribute up to the type of health plan they are covered under, either individual or family. Likewise, if an individual has a domestic partner, if both domestic partners are covered under a family health plan and one is a tax dependent of the other, the partner that carries the coverage can open up and fund an HSA up to the family contribution limit and pay the partner's qualified expenses from the account. In another scenario where domestic partners may be covered under a family plan, but neither is a tax dependent of the other, each partner may open an HSA and each may deposit up to the family contribution amount. If there were two County of San Diego employees who are tax dependents, each are covered under the separate medical plan. So each has an individual account. Collectively, they may contribute up to the family maximum.
I'm still here, Suzanne, just checking the Q&A box.
That's okay.
Nothing here.
Maybe as long as we're filling a bit of time, I'll call out a few bits of information about HSA accounts in retirement. Once an individual is enrolled in Medicare, they are no longer eligible to contribute to their HSA account. However, any funds within that account may be used. If you use the funds in retirement to pay for a medical expense, there is no, it's done on a tax-free basis. There is no penalty. Once an individual hits age 65, they may pull funds from their HSA account with no penalty. However, it will be considered as taxable income if it is not used for a medically appropriate item. There is a movement now of people using their HSA account as a bit of a supplementary 401k account in order to set aside funds in that fashion. It's always best to keep funds available for medical expenses. However, that is one of the very intriguing flexibilities of the HSA account.
Thank you for revisiting that information, Suzanne. Yeah.
Mhm.
Thinking if there are no more questions, we're safe to conclude the webinar. We'll give it just a couple more minutes. But again, if there are no further questions within a couple of minutes, we'll go ahead and conclude the webinar. And I would like to thank everyone for joining us. Let's give it a couple more minutes. All right, everyone. Well, I certainly think this concludes our webinar. We'd like to thank you again for joining us, and have a great rest of the day.
Thanks so much.